pleasure for the Google Developer Student Club at Health International Business School to embark on a new interactive and blooming journey, the GDSC podcast, with me, Ganga, and the GDSC team. Aspirations of our group and discussions of present and the future have become a pillar for structuring our thoughts on tech and business through a platform that would reach beyond just the minds of GDSC HALT. Let's get started then. LLMs such as ChatGPT has given us a tangible glimpse to the surreal galactic world of AI, but there is far beyond it. Via our podcast, we will delve deeper into different and maybe more oddly speaking implications of AI. We wanted our transaction of ideas for the first episode to be on one of the largest transactional world, investments. How can AI help, imitate or replace the intricate and delicate work of investment, intelligence, and way much more about it? It is our pleasure as first cast to have someone whose words and ideas are always a food for thought for us. The VP of Wells Fargo Advisor, the Quantitative Analytics in the Department of Quantitative Analytics, Professor Thomas Kurnicki. Welcome, Professor. Good afternoon.
Thanks for having me. Your words make me hungry.
Okay. They were supposed to, because we're going to cover a lot of interesting questions today, and we are looking forward to learn.
Wonderful.
Because you have a rich experience. You want to talk about your experience?
I'm really glad to be here. And maybe some of your listeners know this, but I'm actually based in San Francisco.
Okay.
And moved here to Boston a few weeks ago. Well, actually, by now it's 2 months ago. And I got to admit that there is definitely some uniqueness to this Boston area, having these huge and large investment institutions like State Street, like what's the other one? The Prudential Building. Well, Prudential kind of has a investment arm as well, but on the other side,
we have Wells Fargo.
We do have Wells Fargo, yeah. And thanks for coming out to the office the other day.
Thanks for the invitation.
That was an amazing sit with a few of the best students from our cohort. But the point being is that it doesn't really matter whether it's West Coast or East Coast. The investment industry is there, right?
Yes.
Now, it does feel like I've been living and breathing this AI, machine learning thing in San Francisco for a few years now, because that's kind of, Silicon Valley is the heart of data and technology. More on the software side, but still you have all of these startups doing machine learning AI. So I can definitely see that this topic has been booming for the past few years, right? Yeah.
What is it about quantitative analytics that keeps your mind excited today, especially after getting the past years this beamlight of wide range possibilities of Revolution 4.0? And how is that different from when you initially started many, many years ago?
So it's a little bit hard to say, because I'm excited for many things. I'm most excited for students having aha moments. I'm most excited for having fun in the classroom. That's why I've been involved in teaching for the past few years. And I've been teaching classes in coding, classes in data science, classes in predictive modeling, descriptive statistics. Also teaching a lot of finance students how to utilize such predictive models, descriptive models to then work with some of the investment products. But that's what's exciting, right? Now, my work at Wells Fargo is very much connected to that. I'm a quant analyst, analytics specialist, quantitative analytics specialist within the wealth investment management division. But that being said, these two are very connected. And when I go to work, what I feel that I'm doing is making a difference.
Yes.
A difference between having the business making a decision based on just their own generic thoughts, compared to making decisions that are based on data, based on quantitative models. Okay. And I think that's what makes me excited. Empowering others, whether it's at Wells Fargo, empowering our business partners, or here at Holt, empowering students at a business school to make decisions that are based on quantitative models. this feeling of giving people tools, knowledge, and empowering them to make those decisions is what drives me to get up at every single day at 6 a.m. and come to. I don't really treat this as work, but at the end, show up in the classroom, show up at work, show up at the office, right?
And someone wise person has also told me you need to have a passion, and I believe that person was you, because if you don't have passion for something, then you will not be able to divide it between work-life balance and personal life.
True. Passion is extremely important. If there is no passion, your everyday duties become a job.
Yeah.
But if you have passion, if you have fun doing what you're doing, this kind of job of yours becomes more of a way of a lifestyle. So at the end, instead of having a work-life balance, you have a life-work balance.
Yeah.
More on the life and less on the work. And that's what I feel in the classroom when I come and talk with students, empower them with the tools, share my knowledge, share my experience. I can see that in their eyes, right? So that's kind of what triggers me. Yeah.
That's so nice. Passion's on a different thing, but coming back to our topic, the title of our podcast is Democratization of Investment Intelligence. How would it ideally be defined, and how has the definition of it and its operation changed before this new storm of AI?
That's a very tough question, I have to admit. First and foremost, we'd have to start by defining what AI is. Because a lot of people think that it's some magical sauce for everything. But some of the components of AI have been around for a long time. And a lot of these investment firms from the industry, I'm talking more industry-wide, have been using these AI, what we call AI these days, have been using these concepts for quite a while. And AI is still a buzzword, right? But if you were to think about what it means, you will then realize that it could be a combination of what we call more precisely large language models.
Yep.
Right? And we can talk about that in a second.
Yes.
But it could be also seen as some very advanced predictive modeling. And if that's the case, I've asked a friend of mine who is the CTO in one of the startups. It's a biopharma startup in San Francisco. I've asked them to brainstorm with me what AI means, right? And we both came to a conclusion that it could be that we are looking at very complex neural networks. For example, 50 hidden layer neural networks, right? 60 hidden layer neural networks. Mm-hmm. And if that's the case, it really comes down to statistics.
Yes.
It really comes down to predictive modeling. So if that's how you perceive AI as predictive modeling, then all of these investment firms have been doing it for a long, long time. Whether it's predicting returns on products, whether it's predicting some risk for products or client portfolios, they have been doing this for years. Now, it is true that it has been more automated recently using different software, different programs, but they have been doing this for a while. Actually, yes. The investment industry has been very sophisticated. But if you consider the other definition of AI, large language models, which seems to be the prevailing definition these days with OpenAI spinning off ChatGPT, right? For example, it all comes down to a large language model.
Yes.
Then, yeah, the investment industry, just like any other industry, has to catch up. I humbly believe that the investment industry is pretty far advanced in doing that, especially when it comes to scanning, a few examples here, right? Scanning financial news articles and trying to look at semantics in those news articles and trying to analyze that text, large blobs of text, unstructured text, using large language models, right? So if that's the case, then I would say that there is definitely a ton of growth in this division for any industry, not only investment management. If I were a student, if I could go back 20 years in my life, that's where I would position myself. I would position myself to learn as much of unstructured data analytics, to learn the predictive side of it, which could be also considered the large language model universe. Speech to text, text to speech, speech to speech, all of those variations of how you could use large language models. And people think ChatGPT, right? But it's way more than that.
It is.
Yeah. So at the end, I think that companies that embrace that, and many do embrace it, will come out more intelligent when facing new problems from clients, from customers, or going back to the investment world, also facing new economical cycles, right? So I think that's going to be the biggest benefit of going into these large language models, right? Yeah.
So let's go to a scenario-based question. Let's say you go to a bar. I hope Professor's wife is watching, but he's just answering the question. Let's say you go to a bar, and one of the table, there's a classy old school portfolio sitting over there.
Okay.
And on the other table, there's this new flashy AI model. Which one would you go for, under what circumstances, and why?
I have to admit that. I can totally envision that at a bar. I can totally see that. I would combine both. I would say that there is definitely a lot of value in using the old school analytics, descriptive statistics, ex post, ex ante investment analysis, and then combining this, whatever AI means these days, right? But I would consider, if there was a true AI portfolio, I would think that the biggest benefit of having using a large language model to help us design a portfolio for a client would be in the space of customization, would be in the space of personalizing that portfolio for a client. So that said, the old school portfolio design, which uses efficient frontier theory, capital allocation line, which is using a bunch of different factor modeling, let's say French or R squared or borrow factors, you name it, right? So that's what we could consider old school. Again, it comes into defining those things, right? But that's what I feel old school is, right? Or at least the status quo of a portfolio design. So considering that mathematically optimized, low risk, high returns. Well, high returns. Again, we are coming into definitions, right? So a good amount of expected returns for minimized risk. Let's just make it simple for this example, right? So good performance, lower risk, strong Sharpe ratio, strong Sortino ratio, with good factor exposures, right? So old school, and then and actually those portfolios are very well defined.
Yes.
So there is not much you can change in a mathematically good, if not perfect, portfolio. It's there. Mathematically, it's there. It's been around for decades now. Of course, it'll change over time, but it's been defined.
Yes.
Now, the new portfolio, the AI portfolio, is not going to be mathematically optimized. It's going to be good enough to provide value to the client. But what I'm expecting, for example, a large language model do is predict and tell me which specific asset classes, which specific securities within security selection do I choose to answer the client's needs. So very personal choices within portfolio selection, right, or security selection. So in my opinion, combining both the old portfolio and the new portfolio is where I see the biggest benefits, because using just a pure mathematical one has been here for decades. Yes. So we're not really gaining any competitive advantage there. But then having the AI driven portfolio again, mathematically less optimized, but the client will like it more.
Investor relationships.
Exactly. The customer says, I prefer green energy items. My goals are sustainability. My goals are ESG. I'm less risk averse. And actually defining risk aversion is very hard. And here's where large language models can actually help us define risk aversion for a client. So again, AI can help us really customize, personalize these portfolios. So I would say that combining both of them at one table would be the go forward approach. Yeah.
That it depends on the ratio. So if someone's looking for a safe option, so your implication of AI will be less in a ratio wise. And if someone's looking for entirely different, I want to explore. So there's competitive
but
advantage.
see, that's not necessarily going to be the case.
Okay.
It is true that we're going to have market competitors just offering the old school stuff, but we're going to have some advisors, and this is maybe where the fintech comes into play, that offer more customizations through whatever we call AI, right? But I think that those companies who will combine both together, and again, the two are not mutually exclusive. They're both quantitative approaches, right? I think those will win. Yeah. And whether it's equal weighted or 60-40 or 70-30, I don't really know what that's going to be, to be honest. And I'm at no place to say what it's going to be.
Yes.
I actually don't know.
Yeah.
I actually don't know. We can assume the baseline of 50-50.
It's difficult to define. It depends on the situation as well. It boils down to the situation we are in. So if you're looking for something really new, then we do that accordingly. Well, I'm not hoping for very specific answers because it's Wells Fargo. We don't mess with them.
I am really kind of trying to think big picture here, right?
Yeah.
So I'm kind of trying to think fintech, but also old school investment managers, right? And I see benefits for both sides doing the combined approach.
Oh. So we've talked about the models, prediction models or the AI stuff. So we have portfolios. Could AI accidentally encourage excessive short-term trading or gamification of investing?
Before you move to a new question, your previous question sparked a joke that I love to tell my students. Okay. So just imagine that your old portfolio is a SQL query, and your new portfolio is a AI generated SQL query.
Yeah.
Okay. So, and I'm smiling when I say this, but let's just assume that both of them walk into a bar. So they walk into a bar and they walk up to the bartender. And what does the bartender say to both SQL queries? Hey, can I join you? Right, which is the essence of SQL. It's joining two different tables, joining two different objects, right? Two different queries. So again, back to what I said, joining both together is probably where we can create the most business value.
That's such a nice example. I can really imagine the joins of two different SQL queries with the optimization of AI and with the perfection of old school model.
Yeah.
I can imagine it right
Same
now.
Model.
Yeah. Same model, but a better version.
Based on relationships. Exactly. Yeah.
Moving on to the next question, so we've talking about portfolios now.
Yeah.
Could AI accidentally encourage excessive short-term trading or just say gamification of investing, thus undermining the long-term wealth building strategies?
Yes. I feel that some companies out there, again, hard to pinpoint, and that's not the goal here, but some companies might be inclined to use AI as a buzzword to sell short-term strategies. And one might argue that you can make huge returns and big money using short-term strategies. But then one might argue the opposite, and that's me, right? I'm a long-term focused person, investor myself on a personal level, right? And if that's the case, you don't want to be listening to buzzwords. Buzzwords also, aka noise, right? You don't,
Yes.
you just want to shut that off. You want to be focused on 8, 10, 12 years out. And if that's the case, then you can still use AI, predictive models that use those components that we have talked about earlier, but you're not going to be trading daily. And if daily trading or hourly trading is your goal, you can use whatever you want, right? You can do whatever you want. You can just say, oh, it's 9 a.m. Let's buy Tesla, right?
Yeah.
Oh, it's 12 a.m. Let's sell Tesla. But again, what are the reasons for your trades? And again, I'm not a trader. I'm not a short seller. By no means, I'm not. I don't believe in those things myself personally. But yes, I can definitely see some people and maybe some companies try to leverage any buzzword,
Okay.
not only AI, any buzzword to increase their revenues, increase their profits. And when you trade more, those are trading fees. So at the end, who's making the money?
The company.
There you go, right?
That's so smart.
Yeah. So I think they will use that. I think it's actually happening as we speak. Yeah.
Let's not be specific, but today companies are using that buzzword everywhere. So again, we don't want to be specific, but some companies are making their books grow larger than they should. Do you believe that it's in some time, looking at long-term strategies, it's gonna boils down or it's gonna crash? Like, crash can be a harsh word, but it's gonna see a downfall.
I believe that everything in life is cyclical, especially financial markets. Also buzzwords. Look at machine learning.
Oh,
It's been a huge buzzword before, and now it's not, right? Now it actually got more precise. People have been defining machine learning. You've got supervised, unsupervised. Within supervised, you have classification, regression, right? So at the end, we're going back to the statistical world, right?
yeah.
And I think the same is going to happen with AI.
Okay.
It has launched some time ago. It's not a new buzzword, but it's been at the seed stage for a while.
Oh.
And then I want to say, and here time is flying so fast, but maybe 2 years ago, maybe 3 years ago, it kind of went on that trajectory to exponentially grow in its buzziness, right? And with OpenAI releasing, the ChatGPT versions, it kind of exploded. So right now we're at the explosion of it, and it'll have ups and downs for the next years, I would say, but eventually it'll become a concrete definition at the end. Potentially, people might just stick with the large language model definition of AI. We'll see how that goes. Maybe it'll get some branches to it. Yeah.
Well, we're all hoping for it doesn't affect lives. It can affect the markets, but we are not ready for another crash right now. Like that.
Yeah, we'll see about that. Time will tell,
Yeah.
right? Yeah.
I like the example you gave, which brings me to my next question. That is, leveling the playing field sounds inherently positive. Could AI achieve the consolidation of power for few dominant players, the gatekeepers of investment intelligence, like BlackRock's Alibaba? Like that's been old. It's an old school model, but it's there. It's a big model, and or would it be the other way around, and favor small companies like Acorns, which are just fintech companies, small companies?
BlackRock is right now the biggest investment manager in the world.
$9 trillion
Yeah.
in assets under management.
That's right. It's the biggest game player out there. So they have a competitive advantage right now. They have the resources to spin out virtually anything they want, right? So that said, that's what I see happening here. Another really interesting game player in this industry is FactSet, right? They're also positioning themselves as a very tech-based company, provider of tech solutions. But I can definitely see smaller companies utilizing that as well to their advantage. Now, whether it's going to be implemented in a feasible way for those smaller companies, time will tell. Smaller companies do have budget constraints, investors constraints, right? If they are still private, then investors have a huge saying on that. The good thing is that investors are following AI, and they seem to be positively inclined to investing in AI these days. So maybe there is going to be some growth there.
Okay.
But back to the story. If anything, in my personal opinion, I think that this might create disparity.
Okay.
The big guys will gain more by implementing
Yeah.
these models in a very concrete way into their current existing architecture versus the small people, or the small players I should say, will spend money and resources doing it to attract maybe new clients, but it won't be at a large scale. Okay. So definitely the size plays a huge role here. And I don't think so. Your question was, will it basically level up the game? It won't create uniformity. If anything, I somehow feel personally that it might create some disparity. Yeah.
Because I kind of agree with your reply, because they have more resources to polish the models.
Yes.
Like, those companies can play with the models and polish it better.
And
But
it's still expensive.
yeah.
The skills are the most expensive.
Yeah.
You have to hire engineers, data scientists, database engineers. So that said, those are all very expensive roles to fill in. Now, the big players have those resources already,
Oh, yes.
right? The small players, they might, but they would be also limited, right? The teams are smaller. Capacity is smaller. So do they have enough resources and funds to expand in that direction? Again, in Silicon Valley, a good data scientist makes $250 north. Right? So north.
North, yeah,
So-
north of that.
So that said, the big players, sure, they have those people hired already. They can afford more of those people, right? With the skills. So again, the challenge here is the skill set.
And bigger players can afford the
Yes,
talent.
that's
these
right.
days.
That's right. Yeah.
I am surprised by the answer in a way that it'll make our discussion a longer. We can cut it, but it'll make our discussion longer than it should be. But they can use these models to increase their computing power because they don't need the hardware anymore.
True. Hardware is being outsourced these days.
Yeah.
Now, the big players do have their own hardware. They
Yes.
have huge data centers all around the globe.
Mm-hmm.
Very few actually have, well, depending on the industry, but fewer and fewer decide to invest in architecture in Silicon Valley because it's too expensive. They go offshore. They go Asia, they go Europe,
Yes.
they go South America, right? Because resources over there are actually significantly cheaper.
Mm-hmm.
And you still have access to very smart people.
Yes.
So there is access to the skill set without having to pay for large and expensive data centers, right?
Yes.
It's a fraction of the price. So yeah, just to follow up on your point.
But it's still, the disparity will be there.
I think so.
Yeah.
If anything, it might increase.
Well, you've mentioned that you're not an emotional investor, but we have it as a question. So
Sure.
even with the best information, investors are human
Yeah.
and prone to emotional decisions.
Mm-hmm.
Can AI-powered tools address biases like overconfidence or fear-driven selling?
I believe so.
And also, how AI's lack of emotional infusion can affect the investment world?
The latter question is hard to answer. But the first question, my opinion there is that we should be able to identify which decisions that the investor makes is more emotional
Mm-hmm.
and which decision is based on data, which decision is more concrete based on actual messages from the market. And then if we have a proper large language model to determine those things, we could say, oh, stop right there, stop. Don't do that because you're being emotional, right? And it's not only in terms of what the markets are doing, right? If the market is tanking, the investor will be inclined to sell,
Yes.
right? So one thing is to consider concrete data points from the market.
Mm-hmm.
Another thing is to consider what the investor says over the phone Oh my God, I'm panicking. Oh my God, I can't I can't stand this anymore. Sell, 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 sell. And if a large language model is reading that, it would then identify the sentiment
That it's emotional.
and block it. Block it, or at least recommend to whoever is working on the team to prevent that decision being made, or at least create some filtering to it, right? At the end, it's the investor's money. They can do whatever they want with that. But yes, a large language model could tell us that's being too emotional, right? It's a good thing. I think it's a good thing. Yes, client emotions, client sentiment, definitely a huge advantage of using it.
But looking back at the 2008 crisis,
Yeah.
the housing crisis,
Yeah.
investors, it was a bubble of backing the loans
That's right.
and it cracked down. So didn't it have an emotional content to it? And wouldn't
That was
emotions
a
would
very
have helped?
systematic problem
Okay.
for many banks. But there were many individual investors that panicked.
Yeah.
Excuse me.
Yeah. We can cut
It's
it.
the
We can
hard
go-
seltzer, but that's what I said still stands, right? Back then in 2008, it was a systematic problem. There was really, well, the consensus is that there was really no way to stop it, though one might argue differently. But let's say that it was a systematic thing and there was no way to stop it, right? You're going to have these many, many small players that freak out.
Yeah.
Oh my God, it's tanking. I can't stand this anymore. I'm losing all of my life savings. What can you blame them? No, because if they're 70, 80% down, they're going to panic. In that situation, they're going to make emotional decisions. If they had stayed invested, they would have recovered, not quickly, but they would have recovered, and at the end, potentially made even more on that, riding out that dip. So that's also why it's extremely important to stay invested long-term, in my opinion. Short-term trading, again, creates noise, but long-term investing helps you ride out those emotional ups and downs from the market. So back to your question. Yeah, I agree.
It's good that AI is not emotional. It doesn't have emotions. So it will look at, we can we comment that it's good that AI doesn't have any emotions for investment purposes?
That's a tough question to tackle because large language models understand sentiment.
Yeah.
They can respond with sentiment. They can respond with some dose of happiness or sadness.
Mm-hmm.
And if that's the case, it is the model developers' responsibility to make sure that the response is emotional at an optimized level. Not too emotional, not neutral,
Yeah.
but giving just enough emotions to help the other side achieve their goals.
That's
right? Yeah, so that's on the model developer, right?
That's a really nice answer.
Yeah. Well, it's the true answer, right? we need to ingest enough sentiment into the responses of these models
Yeah.
so that they don't feel robotic. But on the other side, you also don't want to be overly happy when clients are losing, let's say, 40% of their portfolio like happened in 2008, 2009.
Yeah. Recently, at the World Government Summit, Jensen Huang, the CEO and founder of NVIDIA,
Okay.
made a comment
Yeah.
that children should not learn coding anymore and they should leave it to AI. Looking at the present conditions, how would you redo or relearn quantitative analytics, and what would be your advice how to approach the AI, this thing, and quantitative analytics in the future?
I think he's a smart guy, but I totally disagree.
Okay.
Totally disagree. I have 2 daughters myself,
Mm-hmm.
6 and 2.5, and I'm starting to teach them how to code. At the end, someone needs to design,
Yeah.
someone needs to manage these models. These things are not self-sustainable. You need large teams of data scientists and modelers and quant modelers to propel these models. That said, my daughters will know how to code. They will know statistics in and out. They will know mathematics in and out. So back to the basics: mathematics, statistics, programming languages. Because at the end, like I said, repeating myself again, but there has to be someone who is managing in charge of these models and people who keep the lights on. There is no such thing as at least not now. There might be in the future, but right now there is no such thing as free will AI.
Yeah.
Right?
We haven't reached the AGI concept yet.
So that said, someone has to be there to manage it. I'm not a huge believer in using AI or machine learning without understanding it. So that said, if you can't codify it, if you can't show me the statistics and math behind it, should you be using it? Do you understand what's behind it? If you were to be using let's keep it simple, a logistic regression, would you be confident in using the results if you didn't know that the logistic regression is using a max log likelihood estimation? Right? If you know the function, if you know how it works, then you understand the results. If you don't, then there is a high risk of you not understanding the results. And bad decisions can happen when you don't understand what you're doing. It's a concept between a black box solution.
I was going to say that.
Yes. And something that you understand. I'm a huge believer in understanding what you're doing. And that's why my daughters are learning how to code.
At this age, we are late.
Baby step, we're late.
We're late.
2.5, she still has a chance. The 6-year-old, she knows the concept of for loops. She knows the concept of if statements. She doesn't know how to code it yet, but she understands the concept of loops. I'm teaching her with building blocks, with Legos, right?
With the episodes, it helps a lot. So I think she's also going to the videos.
She was featured in one of my episodes. That's right. But that said, if I were to give some advice to current students here in Boston, I would say use things that you understand. Don't use black boxes.
Yes.
Right? And that's the case, and that's why you need to know how to code. That's why you need to know basic statistics, right? And that's what the program teaches you to do.
Well, again, it boils down to the basic understanding of mathematics we have. So
that's right.
Coding is just a logic. If you're clear with your logic, if you're clear with your mathematical reasoning, then it shouldn't be hard for you to code.
A way to implement it.
Yeah, way to implement it.
Yeah.
So, yeah, I was kind of surprised because it's a very big platform. The World Government Summit, it's a very big platform, and from different countries from over the world, the governments come there.
Yeah.
And even the Indian Prime Minister was there as well. So government make these decisions in their own country regarding education by these comments, and which can affect a country's performance, in my opinion.
So India is very famous for having a very strong math curriculum.
I wear the glasses.
There you go. There you go. I can tell that you're very good. Yeah. So that said, there is a lot of extremely smart engineers coming out from India, in my opinion. So it'll definitely define competitive advantages for different countries in the next few years. If a country is going to put less emphasis on quant subjects, mathematics, statistics, physics, then that country will not win this race. Countries that do put a lot of emphasis on the quant fields, like India. Also, Poland does the same thing.
Yep.
A lot of great polytechnicas in Poland. Then that is going to create the advantage for those countries. And time will tell what happens, but my opinion is that that's where the future is, right?
So you please do learn coding. It's not going anywhere. Learn the basic mathematics, statistics, and probability. It's going to help you.
Oh, tremendously. It's going to make you so much more powerful. It's going to make you future ready, using a buzzword, future ready, right? But my last advice here would be that it's kind of hard to learn passion for statistics.
Yes.
And for mathematics. But when you learn them and you learn how to implement them using code, you can become passionate for your own industry by bringing value using your quant skills. And that's what I figured with investment management, that I can bring value using my statistical skills, coding skills within that industry, and that makes me smile. That makes me passionate, right? So again, if statistics is not your thing, that's fine. It wasn't mine either.
Oh.
Yeah, it wasn't mine either.
Certainly.
I was always good at math.
Yeah.
But it's not like I was like, oh, statistics, oh, mathematics, hooray, let's do it, right? No, there was no passion there. But I've realized that by using that inside my industry of passion, brings way more value than not using it or licking the finger and seeing where the wind blows, right? Because that's the alternative, right?
Yeah.
So, yeah, that's it.
This was really, really nice conversation, and I've got a different perspective now.
Yeah.
Because you read this news and these buzzwords and articles and companies making profits, their books are growing, and we kind of get confused. Okay, are we just learning, are those engineers and whatever we learned is not going to be used anymore? Like there's this fear all the time.
Yeah.
The computing power is increasing day by day. There's a talk of quantum computing as well now.
Quantum computing, yes,
so
yeah.
But
it's very tangible. Quantum computing is very tangible.
Yeah.
So it's very expensive to spin this off, but I think companies that are not going in that direction will probably be not. It's a game. It's a game, right? Who's going to have the competitive advantage in the next few years? Quantum computing is one of those things where you want to be in, so that you're not being left off when it's productionizable. Because right now it's not necessarily. Well, maybe I'm wrong. I haven't been really tracking it recently, but as far as I know, it's not extremely productionizable yet. But when it becomes,
you have to get into that.
There you go.
You don't want to be another example for BlackBerry and Nokia and not getting into Android.
True. That's right. That's a very good point there. Yeah. I agree. Yeah.
So that's what I was saying. So I got a new perspective that whatever we are doing, we're going in the right direction, and we should not be afraid of choosing our interest.
Correct.
And thank you for this conversation. I like my passion for something has grown. It hasn't decreased, and for something else, it has grown even more.
Nice.
So, thank you for this conversation. I've really loved the time over there. I hope you did too.
I enjoyed it so much. Yeah. Thank you so much.
Looking forward for another communication, another podcast with you, and bringing over some more guests so that we can have discussions with more intellectual people.
Absolutely.
Like I can be the moderator over there, but I want to listen to different perspectives of different people.
I would happy to join another podcast. And if you want to invite more people to and maybe fight against each other, right, with different perspectives, different views, then more than happy to do that.
Thank you, Professor.
Absolutely. My pleasure. Thanks a lot.